So we got through, before the break, we got through setting up, we did our journal entries, we did our posting to the ledger, we did our trial balance. So now you have a trial balance, but now we have adjusting entries that have to be made at the end of the year, either for errors or accruals. For various reasons you make adjustments at the end of a period. So we're going to go through some of those adjusting entries that we might make. So here, salaries. This is a very common accrual that's made at the end of the period, because very frequently payroll happens not on December 31st, not at March 31st when the quarter ends, okay? Not at the month end. It might just be every other week, okay? Or whatever it happens to be, the payroll comes out several days after the end of the period, okay? Sometimes payroll is it might be 2 weeks after the end of the period. So what happens is, just because you get paid, let's say you have a December 31st year end, let's say you get paid January 5th, but you've been working since December 20th, right? So December 31st comes around, you've earned 10 or 11 days of salary, right? So even though you haven't been paid for it, you've earned that salary through the end of the period, and that company owes you that money. So if you were to leave as of December 31st, they would owe you 11 days of salary, right? So what happens is you have to accrue those salaries at the end of the period via journal entry. So you haven't received your payroll yet, but you still have to accrue that payroll. So this would be the type of journal entry that you'd make for your payroll. You'd figure out how many days have gone by, what your payroll normally is. You figure out how many days have been earned by your employees as of the end of the period. And you debit salaries expense. You credit either accrued salaries or salaries payable for that amount. Okay, so that would be one type of adjusting entry. So you've made a trial balance already, but you can make a trial balance at any moment, right? We made a trial balance, but we didn't accrue all this stuff. We have to accrue the salaries in order to be properly on the accrual basis in accordance with GAAP, right? Because we have to recognize revenues when they are what? Earned, and expenses when they are incurred, right? So we've incurred, in my example, 11 days of expense, but we haven't paid it yet. So we have to record the expense when it's incurred. So that would be as of the end of the period. You may have receivables and revenue that have to be recorded. So let me give you another typical example why this is here as a month end, as a period end accrual. What a lot of companies do is they work on a cash basis. And then at the end of the period, they put themselves on the accrual basis, just for the end of the period. So how can let me see if I can give like a simple example here. So but many companies, what happens is, so I'm the controller of a company. I have somebody who works for me in the billing area, and I have someone who works for me in the payables area. Generally, what happens is the person in the billing area doesn't really, I shouldn't have said billing. I should say like collections area, right? They receive cash, and they record it as revenue, right? That's what they do. They bring in cash, they make deposits into the bank, and they put it in as revenue. They record the revenue in their, and that's their simple function. That's what they do. Okay, money comes in, they make a deposit, and they make a journal entry, or somebody else makes a journal entry to record that revenue. Okay, if you have proper controls in place. So at the end of the period, we have to look and say, is there anybody who hasn't paid us who owes us money? Okay, so for example, you think of, it's funny, I say this like every time I teach this class, I always end up giving examples of a bagel shop. That's like always the first thing that pops into my head. It must be because I eat so many bagels. So it's like the first store that comes into my mind is like, oh, I'll just talk about a bagel shop, which is like kind of silly, but I'll just use that as an example, right? Because why not, right? So, so if I'm a small bagel shop, right, and people come in, they pay me in cash, and that's the end of it, and I have my sales that I make, but I also have some customers that are companies, that are local companies, and they buy stuff from me, you know, and I give them, extend credit to them, basically. I say, you don't have to pay me for like 30 days because that's how, they had to pay me right away, they might not buy stuff as frequently, right? And this is how I have this goodwill with these companies. I extend them credit and whatnot. So at the end normally what I do during the period is I just record revenue. I don't bill them and then record it as a receivable. I just create a little invoice on Excel or something and I send it out to them. At the end of the period, in order to be in accordance with GAAP, I look at all the people who haven't yet paid me. I look at all my invoices that are not stamped paid. And then I input them in a journal entry, and I debit receivable, I credit revenue. That puts me on the accrual basis. See? So I just do it once at the end of the period. I don't do it consistently throughout. You get it? Make sense? That's what a lot of small companies do in reality, because they don't care during the period about who they bill. They have a little system. They have a little 3-ring binder. They put the invoices in there, and then they just stamp it paid. They're not that. This is what a lot of companies do. They're not that sophisticated. They just record it at the end of the period. Yeah, I don't want to say it's just small businesses that do that. Large businesses tend to bill, and then they they debit receivable credit revenue as they bill, right? So in a larger company, you'd be less likely to see that. But many small companies, and there are many small businesses, and there are even some medium-sized businesses that just aren't that sophisticated. This is how they work. Yes?
There is some limitation, yes, for companies to use cash.
What they're doing, these companies for the audit purposes would go on the accrual basis, but they may be cash basis during the month. Right. So yeah, of course there are limitations, because at any given moment in time, you can't print a report and see who owes you money and how long they've been outstanding. There are many limitations to doing business this way. I'm just letting you know that this is what happens sometimes. Okay, that many companies work this way. So these are accruals. Adjusting journal entries. So another thing that happens, and this happens, I would say, in big companies, small companies, this is very common, right? Do I have as an example here? Let's see. Okay. I don't even have this as an example. So adjusting journal entries for prepayments. Let's just start here, and I'll give you the other thing I was going to tell you after. So the cash flow precedes the recognition of the revenue. So you pay your insurance up front for the period or for the year. You make one journal entry, prepaid insurance, you credit cash. Believe me, you do not every week adjust that prepaid account and say, oh, well, I've used some of that up. Again, that's just not how people work, right? You make these entries at the end of the month, probably, at the end of the period. You don't probably maybe you do them at the end of the year, but if you do any kind of reporting with frequency, this would likely to be, you ever hear people say, oh, it's the month-end close. What a pain. These are the kinds of things that they have to do. They have to adjust all these accounts to put them to their proper balances. They're accruing things that they didn't accrue. They're putting themselves on the accrual basis if they haven't been. These are all the things that you have to do at month end to get your books to look that they're properly in accordance with GAAP. Okay, so here, here's the initial prepaid. Here is the journal entry that you would make to expense some of that. So here's what you recorded at the beginning of the year. Here's what you record at the end of every month to expense a portion of the prepaid. If you're like the magazines, which is always that common entry, that common example, okay? People give some other really great examples. I just think magazines is very simple to think about. You would debit the unearned and credit revenue, credit the earned revenue, right? As you earn that revenue, if you're the person selling the magazine, right? You have to recognize that revenue at the end of the period. Any questions on what I'm talking about so far? Okay. So other adjustments. I've mentioned this earlier. You have these different estimates that you have to make at the end of the period. And again, you don't just say every time you get a receivable, well, what percentage of that specific receivable do I expect to be uncollectible? You'd be sitting there making a million journal entries. These are the kinds of things you do at the end of the period. You take a look, you evaluate your receivables, and you would adjust your bad debt expense in your allowance account. You might do this at the end of the period. You might do this at the end of the year. But this would be an adjusting entry that you would make. You would not do this as a regular entry during the period. And last but not least, depreciation. Now this is a funny one. In the experience I've had, so you have to record depreciation on your fixed assets. People have these, like, some people have very sophisticated fixed asset systems, and a lot of places have big, long Excel spreadsheets of, like, every asset from the beginning of time that they don't even, necessarily know where they're all at, but that's a whole nother, won't even get into that. But you have to record depreciation on those assets. So you calculate it, and you make a journal entry for it. Many accounting systems don't have a separate module for fixed assets, right? You have to record that somewhere separately. Very sophisticated. If you work for a large corporation, that may be different. But small, medium-sized businesses tend to have some other method for having to just track their fixed assets, pick a depreciation method, record it, and this would generally come right before the auditors are here, right? If you're not reporting, if you're not some kind of a public company reporting, you don't necessarily depreciate your assets. You depreciate when you're reporting to outside investors or